Welcome to this week's Tech Talk from MarketEdge.com, your source for technical analysis on over 5,000 stocks and ETFs. My name's Rachel, and with me today is David Blake, CMT, here to discuss last week's market activity and what we should be looking for as we head into this week's market. David, how are you today?
I'm doing well, thank you.
Great, let's jump right in.
All right. Well, not a lot has changed over the last few weeks. We still have global markets struggling with the higher oil prices. We have Iran shutting down the Strait of Hormuz, and now we have Houthis threatening to shut down another strait to get Mideast oil out of the region. So that's, of course, causing global markets to move lower. We also have yields that are starting to tick higher, which is over some inflation fears as the oil goes up over $100 a barrel. Actually, we had the 10-year Treasury hit a 7-month high last week. It closed at 4.44, and the 2-year T-bill landed at about 3.91. We are getting a little bit of a break from that this morning. They're ticking down. That's allowing the stock market to give a little bit of a bounce here on Monday as we get started in the week. Again, we're still following headlines on Iran war. Of course, last Monday, we had a big spike when President Trump delayed strikes against the infrastructure. And then, of course, then Iran comes back out and says, we're not even having negotiations. So a lot of back and forth, who's right, who's wrong type of headlines, pushing stocks up and down. Again, as we've talked the last couple of weeks, I think those are just things that you should ignore in here and just let things play out a little bit longer until we start to see maybe a rounding bottom or even a blow off bottom type thing where we see a capitulation in the market, and then maybe that we can see that we can have a sustainable rally of at least maybe a couple of days or something like that. And we're certainly not in any form of forming that currently. So the last couple of weeks, we've seen big sell-offs on Thursday and Friday. Investors a little bit more cautious going into the weekend. And that could be the same thing once again this week. One thing I did want to mention, though, about the oil prices, and that's over last week. It basically takes about 28 days once the oil ships, the tankers pass through the strait to get to Asia. And we are right around 28 days now since the war started. And it's probably going to cause oil prices to start to move higher here over the next week as we start to see more shortages, especially in Asia. So that's another reason why I think you should just ignore these little ups and downs, the oversold bounces that we're going to get occasionally off of the headlines. So anyways, I mentioned we are on the longest losing streak for the S&P 500 since 2022. That's 5 weeks. We did end near the end of last week, near the lows of the week. So that kind of affects our CTI, which is our market posture. If the Dow breaks below 45,063, that would extend our bearish market call for another week beyond this week. So just be aware of that. If we have one good sell-off during this next couple of days, would probably extend this bearish market call going forward. Now, as far as the week goes coming up, on Wednesday, we will get some reports on retail and food service sales for February. We also will see the Institute for the ISM manufacturing purchasing managers will come out for March. Right now, I think they're looking for about 52.3 on that. That's roughly even with what we had in February. And then we also will get the ADP employment report on Wednesday. And then on Friday, when the market's closed for a Good Friday, we will get the Bureau of Labor Statistics jobs report coming out. Right now, they're forecasting a 55,000 payroll increase. And that's following February's surprise number where we lost 92,000 jobs. So that'll be interesting to watch. Again, the market will be closed that day, so we won't see how that reacts until Monday morning. But the unemployment rate is expected to remain at 4.4. They'll probably get some comments coming out saying the job market has pretty much stalled, and it's not that we're losing a lot of jobs, just the fact that we're not seeing much hiring. So that's what's going on this week. I don't expect to see a lot of surprises, maybe just a few of the headlines thing. And I think the main headline problem would be if we land troops and they decide to move into Iran. Technical, the condition of the market, again, it wasn't real bad last week. And in fact, going into Thursday afternoon or Friday, several of the major indexes were actually slightly positive. And again, on the AD line, which we talk about showing how underlying breadth is, the NYSE was actually positive. It was flat. I mean, it had I think it picked up like 80 units or something like that, which is nothing. We have the market down for the week. So you are seeing some buying going on the NYSE and some of these other stocks in different areas. Most of the different sectors are all finishing lower, but we're not seeing big moves in them right now. Different technical indicators continue to be negative. MACD's going. We now have a falling 50-day moving average. That's considered a bearish downtrend when you see the major moving averages just roll over and start drifting lower. And then we have momentum that also is negative. We had S&P 500 and the NASDAQ finished oversold last week by a few of the different indicators. One of them was stochastics under 20. So that was something to be aware of. But some of the other indicators that we follow were not oversold. And in fact, the MarketEdge S&P short range oscillator, well, I think it was finished around -5 or -4, which is oversold, but not where you need to be jumping in. Usually when it gets to 7, you're going to see or -7, you're going to see the institutional players come in and expect to get a little bit of a bounce on that. And we're not at that point quite yet. Besides the NYSE AD line being actually flat last week, there were a couple other signs that were positive. And you like to see the secondary indexes, as I call them, which include the Dow Jones Transportation Index and the small cap Russell 2000 and the semiconductor index outperform the other indexes when we're going higher or lead the market lower also. The transports and the small cap Russell were both higher last week. They both carved out a little bit of a gain. That's a positive. We want to keep an eye on that. If they would end up higher again this week, that would be a sign that probably we are beginning to put in a bottom. One surprise was that the semiconductor index, which has outperformed the last few weeks, it finally broke below its 100-day moving average on Friday. That snapped a 2-week win streak, and it's not far off from the high. But now today we come in and the semiconductors are probably one of the weakest indexes that we're seeing right now. I think they're down. Last I looked, the index was down about 2%, which is a pretty good fall for that. I even looked at NVIDIA and AMD and that kind of stuff, and they were kind of flat. There are a couple stocks were lower. I think they're more AI oriented semiconductor stocks were lower, but we'll see that. In fact, right now we're down 3.4% today on the semiconductor index. So that's a little bit concerning because that's been one of the areas of the market that's been holding up the best, and got to see where that will bottom out. I don't have my chart right here on this, but I'll try to put tonight in the daily market letter, maybe where we would look for support on the stocks coming in. Okay, so other than that, we have underlying market breadth, like I say, it was mixed on the NYSE with AD line flat, but we did see a little bit of expansion in the new lows, and also in the NASDAQ. It's also expanding on the new lows. In fact, on Friday, they had 550 new lows, and that's the most it's put up since sometime in January, I believe, in the first week of February. I'm sorry. So that's expanding more and more every day. In fact, today the NASDAQ has another 351 so far. So that's not looking good. But on this bounce, it's kind of strange because today we have 9 of the 11 sectors are higher, and the ones that are lower are industrials and technology, which is not normally what you will see. Financials, the best performing sector. Then you have, of course, the defensive sectors are still finding buyers on that, which then includes utilities and real estate. Maybe the healthcare would be considered that, and consumer staples, and they're all up pretty good today. You are getting guys coming into the week. Maybe they're hoping to get some good news. They're going to start the week off, as happened the last 2 or 3 weeks, where we start off on Monday with a little bit of a bounce, and then the headlines start to come in, and it's hard to hold the gain. So these are guys that are just flipping in and out on any little move or any little wiggle in the headlines, and I don't really think that's something that you want to be playing. When the time comes where we get some kind of positive ceasefire or something like that, of course, the market's going to surge, but you'll have time to jump in there and get something like that. Now, we mentioned a couple of weeks ago that Goldman Sachs said whenever you have an oil shock like what we have right now, that they would expect probably maybe a 17% drop in the market. I think we're only right now about 10%. And in fact, if you look at what we have on a 17% pullback from the high to a trough, for the Dow, that would put up a new target of 41,375. For the S&P 500, that would put it in a target of 5765 to about 5800 maybe. And then for the NASDAQ, be 19,790 to maybe 19,800. So that's still another good little rollover, a little drop from here. And I won't be surprised if we get to that. About that point, I think we'll start to add the positions if we get down to those target numbers, and we'll see how those play out for the rest of the week. But not a lot of new stuff to go on to, like those numbers. So let's just, again, keep those in mind, and we'll just see how the week plays out and just remain cautious going forward from here.
Very good. Thank you, David. If you have questions for David or anyone else on the MarketEdge team, feel free to send us an email to support@marketedge.com or drop us a comment if you're watching on YouTube. You can check out the daily and weekly comment that David is talking about at marketedge.com. Your first 2 weeks of technical analysis on over 5,000 stocks and ETFs is free. Just give us a try at marketedge.com. All right. Thanks so much, David.